Today, I want to talk about how AMC is preparing for a squeeze. You've heard me touch on fundamentals before, so I want to explain how these fundamentals will lead AMC to a squeeze potentially this year in 2024. And I want to show you how scared the shorts are as a result. So stay tuned and let's make some money. Now dive straight in with the key information. So, I want to start by showing you this chart, which has surely got to be the AMC chart, right? You've got the January 2021 run-up, the June 2021 run-up, but then you've got a few more spikes, but then the pullback. So yeah, surely this has definitely got to be AMC's chart. Well, actually, this is the Amazon weekly chart from back in the early 2000s when Amazon was heavily shorted. It ran up from just a few cents per share to over $5 per share before then losing over 90% of its value. But Amazon improved their fundamentals and went on to be one of the largest companies in the entire world, not just trading for $4 or $5 per share, but trading over $140 per share. So Bracco has posted saying this is the Amazon weekly chart in the late 90s to early 2000s. This thing went on an incredible 6,000% run up in only 2 years after the IPO in 1997, but then proceeded to drop 95% from its highs after the dot-com bubble popped. But following the bubble pop, Amazon as well as many other stocks based around those levels for 2 to 3 years. Amazon emerged out of that crash as a leader and has ran over 15,000% since its base breakout in 2003 and over 50,000% from its 2001 lows. And he said it's pretty crazy how many stocks currently have an almost identical chart to this one below. Huge runs in 2020 to 2021, but then 80 to 90% drawdowns from highs and now building out huge bases. He has said many will not leave their bases or ever see highs again, but a select few will emerge as leaders. He said nothing new ever happens in the stock market, it's the same patterns for over 100 years. As I said, this chart is eerily similar to AMC in 2021. The January run-up, the pullback, the June run-up, the pullback, and eventual 90 to 95% drop. But so why is AMC going to emerge as a leader, and why will AMC be hitting new all-time highs in the future? Well, with AMC's improving fundamentals, improving revenues, improving profits, and improving cash flow, AMC is setting itself up to be the leader in cinema. It's already the largest theatre cinema chain operator and is consistently growing, adding new revenue streams and expanding business. The AMC chart is pretty much identical to Amazon from the early 2000s, but potentially so is AMC's improvement story over 2023, 2024 and onwards. And if Amazon broke out of this 2 to 3 year base and then ran up to set new highs, well, how long has it been since the 2021 run? About 2 or 3 years. So AMC is potentially preparing to make the same run in 2024 this year, as long as fundamentals continue improving. Now, I'm not saying AMC is going to be the largest company in the entire world with a multi-trillion, quadrillion dollar market cap, but what I am saying is based on this fact, AMC can easily hit new highs. And obviously with that kind of run up, it would certainly stress those shorts to no end to the point they would end up liquidated. And obviously when those shorts crack and close out their positions, including the synthetics, that's when the squeeze happens. Also, I wanted to touch on today's absolutely massive 188% runner in the Millionaire Mindset Trading Group. But before that, I wanted to announce the prices for the group will soon be increasing when we reach 300 members. So there's not long before those prices will be increased. So be sure to join in and be grandfathered in at the current price forever before those prices go up. As I said today, we traded Nexi or Nexamune, which is actually a stock we traded a few weeks ago. At the pre-market, it set this high at $3.83, and I said a break above this level would push the stock higher, which it did all day long. We had Andrew getting in at $6.96, selling at $9.43, making over $1,000. We had the dip making 100% profits, and we also had B making another $1,000 as well. So guys, be sure to join the Millionaire Mindset Trading Group before those prices go up using the link in the description below. And Travis has tweeted saying if you want straight cutthroat fundamentals put simply in front of you in graphical form for free, check out these screenshots. So AMC has 8.8 billion in assets and 10.9 billion in liabilities, which, as I've said before, is not an issue because there's many other companies out there like McDonald's, Starbucks, Domino's and tons of others that have way more liabilities than they do assets. That doesn't mean Starbucks, McDonald's and Domino's is going bankrupt next week guaranteed because their liabilities are too big. In fact, these are some of the most successful companies in the entire world. The reason why they have high liabilities is because they're in capital intensive industries. Some companies out there outsource everything and have practically no liabilities, but some companies out there have to spend a lot of money on expensive produce and machinery and have high liabilities. And this screenshot is showing that AMC is currently undervalued by at least 77% based on its worst case intrinsic value of $27 per share. If you flick this to the best case, AMC's intrinsic value is way higher than that, which is basically the bare minimum of what AMC should be worth based on its assets, its revenues, its profits, and its cash flows. Which, by the way, are improving every single month, every single quarter, and every single year so far for the last few years in a row. And to improve those fundamentals, Cat Striker has tweeted saying this is definitely the way. She said Bill Pulte is letting his 3.1 million followers know as well that he signed up to be an AMC A-list member. Obviously, that was something I touched on yesterday about Bill Pulte becoming a Stubbs A-list member, but it's not just Pulte, he's letting his 3 million followers know too. And as more of Bill Pulte's followers decide to do the same thing and become an AMC Stubbs A-list member, that's just more revenues, more profits and more cash flow for AMC. Now 741 Trey has just retweeted this screenshot or this previous tweet about Collateral Haircuts and interestingly compared it to the reverse repo facility. So this screenshot says, as done previously and as explained in greater detail in Appendix A below, effective May 2nd, 2023, DTC will apply a 100% haircut and assign no collateral value to securities that are issued by an affiliate of any lender listed in Table 1 of Appendix A. And that list is a list of some of the biggest banks in the US, like Bank of America, Citibank, Deutsche Bank, Goldman Sachs, HSBC, and many more. Basically meaning that any securities issued by the company or by an affiliate of those lenders cannot be used for collateral purposes. As a result, that led to a massive decrease in the uptake of overnight reverse repo agreements. Because those repo agreements could not be used as collateral or for collateral purposes, which is what those banks desperately need. Especially with the increased banking capital requirements that have been implemented just a few months ago, requiring these banks as a result of Silicon Valley Bank and Signature Bank to hold more cash collateral. So these banks are now required to hold more cash, their collateral isn't any good any longer, and AMC has been basing for 2 to 3 years just like Amazon did in the early 2000s. And as a result, these shorts are even more scared and trying to convince you to get rid of Adam Aaron so they can destroy AMC. Now I want to read out this tweet, and I don't mean anything against GameStop, but this tweet has a very appropriate point. Stormtruther tweeted saying if Adam Aaron killed the squeeze for AMC shareholders, why hasn't GameStop squeezed yet instead? Or is that Adam Aaron's fault as well, right? He said quit blaming Adam Aaron for preventing the squeeze or for creating synthetic shares or for manipulating AMC's share price when it's clear he didn't cause that. Yes, he's issued even more shares, which as I've touched on in the past, I'm not a fan of dilution, but you also have to remember how many synthetic shorts are out there. And again, as these shills are now trying to convince you of, supposedly there's no synthetic shares out there at all. So AMC filed this new share filing today for a few million more shares, and Sith Bull Sakius replied saying this isn't bullish. He's almost let everyone out of their short positions and for a handsome profit. Which, as I say, is just completely incorrect. By issuing 2 or 3 million new shares, it does not allow shorts with billions of synthetics off the hook. As the Moon Traveller added, he said, so you believe there to be around 40 million shorts, because I believe there to be in the billions of shorts. Again, these shorts are trying to convince you that synthetic shares don't exist and that Adam Aaron has sprung and freed every single short seller from their doom. Which, as I say, is just not correct, especially if or as there are billions of synthetic shares. As I say, Adam Aaron isn't working for these shorts or freeing them from their short positions. If he wanted to do so, he'd have bankrupted AMC long ago. And Nate has also tweeted about one of the senators, Warren Davidson, who's currently down 77% so far in 2023 and in 2024. You can see from this screenshot of those senators and of those people in Congress, Warren Davidson is down 77% and Austin Scott is down 56% too. Saying that's what happens when these politicians invest all of their money with hedge funds and side with the hedge funds too. So guys, be sure to let me know what you think down in the comments below. And as always guys, be sure to ding that notification bell because that way you'll be alerted when I upload a new video. Cheers.